In this video, I am not going to bore you with the fundamentals of Solana, as in its total value locked increase over time, that there's adoption. Because we've already talked about this in prior videos, we've also talked about the number of active addresses. We've also talked about how Solana is mainly used as a platform to trade meme coins. This is the largest asset on the Solana chain, ordered by their liquidity pool size. And it's pretty much all just meme coins. I'm also not going to talk about Pump.fun, the leading meme coin platform across Solana, but even across all blockchains. Here's the TVL of the Pump ecosystem. Instead, for this video, we want to focus on Solana's relative performance. This is Solana dominance. How much of all of crypto in terms of market cap is currently in Solana? It's a very nice measure that shows us if an asset tends to be rather cheap or expensive at any given point in time. This is a chart that spans the last 2 years, and I've published many videos around Solana at the end of last year. For example, this one over here, make or break for Solana on December 19th. Or this one here, will Solana gain 200% soon? We are revisiting the same chart time and time again, and things are developing exactly as we anticipated. Relative valuation charts are useful because cryptocurrencies tend to go up and down at the same time. There's high correlation. When Bitcoin bleeds, then most altcoins come crashing down as well. But when Bitcoin is going up, there is a good chance that altcoins appreciate. The problem is always, what is an altcoin doing relative to the rest? Do we have the additional idiosyncratic risk of an individual asset compensated? Or in other words, is it worth to buy Solana, say, over Bitcoin? Because Solana in theory is more risky than Bitcoin. Bitcoin is larger, Bitcoin has a larger market cap, it's got more adoption. So once we buy Solana, we take on more risk, thus we should expect more return. What we're seeing here, that's Solana relative to Bitcoin. Over the last 12 months, we have seen higher lows. And from the current level, Solana could easily outperform Bitcoin by more than 50%. But of course, once we hit the higher levels here again, it might make sense to at least take partial profit. I take those trading ranges very seriously. And the reason is I see crypto as a game of attention. Where currently all the attention is, we tend to see elevated prices, then profit is taken, prices go down, and then at some point nobody's interested in the token anymore, and that's the time to buy. And so attention moves from asset A to asset B to asset C, and so the dominance metrics are simply just fluctuating. I like dominance charts or relative valuation charts much more than just US dollar charts. With the US dollar chart, we get the overall ups and downs of the macro environment. With dominance charts, we actually see what's going on with an individual altcoin. Have a look at this. This is Solana relative to Ethereum. We connect the tops, we draw the parallel line to those tops. Interestingly enough, the bottoms then also align. And here again, Solana appears to have quite a bit of way to go. Solana could outperform Ethereum by more than 100%. Now, how will this happen? It won't just be Solana dominance going up. It's very likely also Ethereum dominance going down. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. Here is the Ethereum dominance chart, and I'm personally betting my money on this going down as well. There is a quite strong resistance here. The rally caused by the Ethereum Treasury Company narrative, spearheaded by Tom Lee's Bitmine. That narrative is wearing out for Ethereum. And so some of that capital might flow towards Solana. Now, drawing funny lines on charts is one thing. Using backtests, using statistics to determine potentially profitable trading rules is another. I like to make those backtests based on moving averages because it's historically a pretty solid approach for crypto in general. I've backtested all the moving averages for Solana from the 2-day all the way to the 200-day SMA. The best moving average is over here. It's the 58-day simple moving average. So the idea is straightforward. We want to sell whenever we are below the moving average. We want to buy whenever we are above the moving average. So we simply capture the current trend. So when we sell whenever we are below, then our portfolio line goes flat. That's the line in turquoise. The line in white, that's just the Solana price over time. So if we exit Solana every now and then, we can outperform buying and holding, and we can avoid the majority of the bear market. Now, if we don't just sell, but we also bet on falling falling prices during those periods. So whenever we are below, we are actually shorting Solana. Then this chart turns into this chart. Now we've got roughly a 10x outperformance over buying and holding. Now we can refine this even further. We can optimize for leverage. Then we get this chart here. It's not yet a 100x delta. It's roughly a 60x delta. So 60 times better than just buying and holding Solana over the same time period. And so I like this approach very much. I think it's a great way to time the market. And currently we are above the 58-day simple moving average. Yes, there's always the risk that we fall below again. The moving average is currently at roughly $132. But if we don't fall below, but we actually enter another run up again, and let's say Solana just goes up by another 50% or so, the potential risk to reward, I believe, is very much worth it. Through the copy trading pool, I'm currently putting more than 1.6 million on that bet. So I'm currently long Solana, but of course I will cut that position very quickly in case we fall below the SMA. On the topic of copy trading, in the last 5 months of 2025, I already opened such a pool that made 17%, while Bitcoin lost 25%. Here's my track record over the last 50 months. This is the alpha over buying and holding Bitcoin. The dotted line is the 12-month average. On average, I made 1.9% outperformance per month over buying and holding Bitcoin over the last 50 months. And so if you want to manually copy trade what I personally do, then feel free to check out the premium membership. There's also a way to automatically copy trade. So you can just deploy your capital. There is a 10% performance fee though. So feel free to check everything out. All the details again on the website. Click over here. See you next time on YouTube or see you in premium. Cheers.